Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again at euro currency. So as you can see, miracle hasn't happened. European Central Bank stands as usual, so in flat decision. All that they have said is just they intend to proceed with the measures that already stand in the market. So it seems that central banks take some pause to understand what will impact makes their measures on the markets, whether it's sufficient support or should be provided more. And second, they try to estimate and understand the value. Is it sufficient or not? So from that standpoint, overall statement from the European Central Bank was, well, it was not bad actually, because they said that despite what will happen in nearest months, they will continue to keep measures at the same pace. So, and theoretically it suggests that someday in the future, small measures could be provided. But currently, as I said, for the euro, it is important decision to trying to accelerate their measures to take the lead in some spheres. So mergers and acquisitions currently stands in the euro better than in the United States and among the business. Well, the more liquidity, more bonds, government bonds on the market. It could be this big stimulus to corporate finances. So it's a big tool for financial sphere. You could use bonds, you could make repurchase agreements, you could use it as a collateral for the different different businesses. It could be the measure to generate some short-term liquidity. So that's really big tool. And the budget of the European Union, its overall debt value, national debt, let them, without no impact on the credit risk, increase the amount of this of the bonds on the markets, significantly increase. And that will be a really big stimulus for overall finance sphere. But they somehow do not hurry to do this. I'm sure that, as I said, when the United States will take some relief of the current situation and tensions that they stand currently, they probably will fill this empty space, and well, I'm sure that they will be more active in ideas of the money printing. So I am a bit disappointed with this central bank result. And you can see on the market that markets also slightly disappointed, because you can see that yesterday we've got this drop. So the active measures that we expected have not been realized. Meantime, it doesn't mean that overall context is changing. It's not, and in fact, market still stands bullish, and well, we're still watching for the upward continuation here, although it might be a bit different on the intraday charts. On the daily chart, we have the bullish trend. Here's minor drop, so maybe here we could get a bit deeper retracement. Maybe it is possible before upward continuation, but it's not necessarily will happen. I will show you, because actually market stands in strong support, and definitely to say that it will be deeper retracement, market has to break it. But currently it hasn't happened yet. So on the 4-hour frame chart, we are watching mostly for the same pattern. This butterfly has not been reached yet. That's the retracement that we've got. If you remember, yesterday we talked about this support area, because that is wide support cluster. It's starting from the confluence that we have specified yesterday. The market stands right now here, 1376. And it lasts till this confluence, 1330, 1350. So it's approximately 25, 40 pips difference. The width of this range. So you can see from these tops, That stands approximately here in the middle of this range, right till this area. Well, now market stands in a bounce. So to keep bullish scenario intact, market should not break the major confluence here. Also, it provides agreement levels. So I'll take a look at the hourly chart. We have few targets. It's A, B, C top. OP is already completed at the confluence creating the first agreement. That's actually the area that we have specified yesterday. So that's that market should not break it down to keep the short-term context valid. But take a look. Another target stands at XOP. An agreement now stands with this wider daily confluence support of 1330. That's the ultimate level for the bullish scenario in general. So it means that we could accept fluctuation in the medium term somewhere in this area, but we can't accept the breakout of this level. So this is an invalidation area for the bullish context. How we could trade this setup? So in general, guys, theoretically it is possible you could try to take the long position up from here, because you can see the bounce here probably will happen. This is strong support. Maybe even miracle happening this time and market will turn up immediately. But why I am not really sure and have doubts on this perspective and suggest that probably drop to the XOP still will happen in the next week, because of this action, guys. This is clearly indicates the disappointment on the investors. That was rising on expectation. It was rising on the decision on the rate, and then everybody expects for we're waiting for a press conference. When it has started, market collapsed. So that is a kind of the disappointment. And market was ready to start upward continuation, but it was not supported by the major driving factor. As a result, it fizzled and market collapsed. Collapse was relatively strong. This logical conclusion, this logical chain of thoughts makes me think that probably we could get here some pullback, maybe got less cheaper to sell we've got, but chances on the dropping to the XOP stand significant. That's my opinion. Well, that's why you could trade this stop differently. So you, for example, could take the long position here where stops below these lows, watching what will happen. This market starts bounce as this does right now, move stops to the break even, and see what will happen. Forming not regardless cheaper to sell. If market starts reverse down, you could just take the profit or just do nothing and wait for it to close by the break-even stop. And wait for this level. That's first approach. Second approach, you could do nothing, just wait for the XOP dropping to the downside. If you have the bearish view, maybe you could try to make scalp short trade with this. If we will get here some kind of the ABCD retracement, got cheaper to sell will be, you could try to take the short position. But personally, I am not really very risking anything with the short trading here, although it could be really a resulting trade because of the context. Context is bullish, and every short trade in the bullish context, it's very risky, choppy, nervous, and well, it just doesn't cost the efforts that you will apply to grab this profit, and you will have to pass through the really big challenge when you're trading short against the major trend. Well, that's why, well, it's up to you, but personally, I do not want to sell. Hence, you could use what you like more, and that's better matched to your personality, what is better to you. But I suppose that euro should reestablish upward direction. Well, maybe it could happen right from here, but more probable, as I suggest, that it will happen somewhere from the next conference and when the market will hit the XOP target.